Good afternoon, traders and investors. Will back here with another one. Today, looks like we got another red day in the markets as daily downtrends do continue. Big day tomorrow with inflation, so that is definitely going to tip the scales one way or another. And we were expecting on the channel, guys, for the past month, we are potentially expecting some hotter than expected inflation numbers. So if that does happen, guys, I just want to issue a fair warning. The markets will continue in their weekly consolidation, but in my opinion, healthy consolidation. So today's video, we're going to go over the major indexes as usual, a few earnings that came out today, and lastly, we are going to cover our big tech names. My portfolio, not so much because nothing has changed. So if you didn't see my positions, just go take a look at yesterday's video, the last 5-6 minutes of the video, and that should be pretty self-explanatory. But as of today, no position changes for me, so figured I should make a bit of a shorter video for you guys. And without further ado, let's get right into it. So you can see SPY down another 0.67% on the day. QQQ down 1.1%. So one of our major losers on the day is definitely technology. If we look at the heat map here, guys, you can see definitely a broad market sell-off type of day again, except really for energy. A couple mixed sectors like healthcare right here and everything. But as a whole, guys, not looking the best today, especially in big tech selling off the most. You can see NVIDIA and Tesla here putting in some pretty bad days. On the sector relative performance here, you can see energy with a big outperform today, but the rest of the market kind of struggling to stay afloat. We got a very nice recovery intraday, but then sold it off in the last hour. So you can see it was kind of like yesterday, big gap up open to the downside, right? And then recovered nicely into the afternoon, but contrary to yesterday, bulls could not keep it up, selling off from 3 to 4 o'clock in a pretty hard way, erasing basically all of the afternoon's gains back to normal. So that being said, guys, let's go over a few earnings before we jump into our major indexes here. Going to go over these very quickly. Quick preview here, guys. So tomorrow we do have Alibaba prior to the market open. That's really the only one that I'm going to be keeping an eye on personally. But today after the close, well, before the open, we got Roblox, Disney, and Trade Desk. So let's get into those quickly, yeah? So first off, we're going to start with Disney. Disney, you guys know me, right? So this company obviously has sold off a bunch from the all-time highs. And we're now sitting pretty much either at 2020 levels, or you can go all the way back to 2016, 15 even, right? So these are pretty much time machine prices, but Disney has been struggling with a few lines of businesses. You can see that in the after hours, they are up to about $90 here. So up 3%. Remains to be seen if they can hold those gains into tomorrow's trading. Now, looking at the earnings exactly. So I'm going to explain this and give you guys a rundown of their business model. Post mixed results for the quarter, plagued by streaming woes and restructuring of costs. Now, subscriber losses continued over the last 3 months, with the company reporting 146 million Disney subscribers during the most recent quarter, a 7.4% decline. So you don't want to see this, guys. Streaming is one of their highest margin businesses, and if they're declining in that, expect profit margins to follow as well. One bright spot for the company was its parks, experiences, and products division, which saw a 13% increase in revenue to $8.3 billion during the quarter. That's completely normal as people resume travel and experiences prior to the past 2-3 years. It's normal that Disney parks should be now operating close to full capacity, right? So let's get into Disney woes. I'll just explain before the article, right? So Disney has a few businesses. They have their streaming business, they have their parks and experiences. I'll also include cruise lines in that. And they lastly have their franchises, their movies and IP, right? So very, very important that they do well on all segments. Now let's take a look on the breakdown here, right? So EPS coming in decently, 1.03 dollars per share versus 95. So they beat on EPS. They did come in slightly negative though on the revenue expectation, and obviously subscribers did tank. So I want to explain, guys. Their parks and revenue are doing good. The problem is that they've monetized the most that they can off their parks and experiences, right? If you've been to a Disney park recently, there's been several articles on this as well. Everything is pretty much priced to perfection. So the park entrance fee, how much you have to pay for potentially like a priority pass or whatnot, your experiences across the park, so different games, different food and beverage venues, they are really at the higher end of their pricing power. So they cannot continue to drive further margins from there, guys. They're pretty much at peak pricing power in terms of their park and experiences. So I wanted to get that out of the way. Now, segment number 2, right? Their their total subscriptions, right? So here's the problem, guys, is they're competing with people like the likes of Netflix, right? Netflix, Amazon, and even Apple TV. And when you're going up against such big players that have such well-established audiences already, it's normal for them to be slightly struggling. So they don't have as good offerings as the other streaming services do. And that's why they are taking a hit here. And number three, guys, is their franchise and IP business. They have a lot of very big movies that come out, namely Marvel and Star Wars. The problem is that those particular franchises have a bit of customer fatigue. You guys know how many Marvel movies have been put out in the past 10 years. They have pretty much peaked on their ability to deliver Marvel movies that people continue to drive in droves to the theaters to watch. And also Star Wars is a bit of the same, right? It's a franchise towards the tail end of its expansionary phase, right? So their major franchises aren't doing so well as predicted, and it costs them a lot of money to make these movies, right? So let's get into this real quick. You'll see in the article as well, right? So the bright spot was the parks and experiences, saw strength in international parks, while domestic parks, particularly Walt Disney World in Florida, saw a slowdown in attendance and hotel room purchases. So not the greatest there in terms of that. If you want to also look at this here, right? Linear advertising and television subscriptions are down, which is a streaming business. Its movie studio has been a hit or miss at the box office, and Hollywood's actors and writers are on strike. So let me just go down to here. So you'll see here, guys, right? So the Elemental movie cost $200 million to make, not including marketing costs, stalled at the box office, generating only $423 million globally. Indiana Jones cost around $300 million to produce and has tallied just $369 million worldwide. So their production costs are absolutely massive. So if they don't get a 2-3x return on these movies, it's not a good deal for them, especially the length of time that it takes them to produce these things, right? So the performance of some of our recent films has definitely been disappointing, and we don't take that lightly, said CEO Bob Iger on the call. As you'd expect, we'd focused on improving the quality of the films we've got coming up. It's something that I'm working closely with the studio on, right? So, you know, a slight setback here. They're not doing the best at the box office. So parks are doing good, right, with the travel rebound. However, their potential capacity to further monetize parks is quite limited. Number two, their streaming services is losing subscribers, right? You don't want to see that. And although they have been trying to market it properly, it's just not working out the best for them right now. And number three, their franchise and IP business is not performing to expectations. They have a lot of costs and they're not generating good enough ROI on those high production costs. So Disney, those are the problems that Disney is facing right now. So they really have to do a good job of cost control and restructuring their business, which is why Disney has not been performing up to standards. You will see, guys, that prior to 2020, this business had no problem generating in excess of 15-20% margins. But ever since 2020, you will see that their margins are absolutely terrible, which is why still, even at a crushed share price like this, they're still running at a relatively high price to earnings because their earnings has come down a lot despite their decrease in price. So still with a slightly high PE ratio. Now, is it a good buy? Yes. But is it a buy that does have its own structural risks with it? Yes. Is it good for a swing trade? Potentially. But do I think that Disney is going to skyrocket back to all-time highs anytime soon without massive restructuring? No. So just keep that in mind, guys. Very, very, very important for Disney. Now, second, we're going to get into Roblox. Roblox had their earnings prior to market open. They got absolutely destroyed, minus 22% on the day, back down to $29, which is coming, guys, to their pretty much lows, right? May and last December in the high $20 range. So this is a company, once again, that's been struggling to make a profit. Every single quarter that they do post earnings, they are still at negative income ever since the past 5 years, pretty much at this point, right? And ever since they've IPO'd, they've never recorded a single quarter of profit, unfortunately for them, right? So very, very, it's not positioned well as a growth company leading into an environment where they have a lot of debt and obviously interest rates have been rising. So Roblox unable to get it done on earnings, and I'll show you why, right? So Roblox stocks fall sharply after earnings, blame the wider loss. So they are not minimizing the losses enough, guys. This is very, very, very crucial for a growth company that expects one day to be profitable. You want to be seeing a steady trend of minimizing the losses time and time again, but they haven't been able to do that, guys. So Roblox was down 20% in the morning trading. It's on pace for its largest percentage decrease since November 2022, right? And the company posted a second quarter loss of 46 cents a share compared with the 41-cent loss that Wall Street was expecting. So you'll see if I pull up the earnings right here, right? That they missed on both accounts, right? So they missed on revenue and they also missed on earnings. So double miss by Roblox, and they definitely got punished for it heavily, right? Bookings were $780 million up from a year ago, but far off analysts' forecast of $787.4 million. Now, so that's it's very unfortunate for Roblox, but they're just not growing at the rate that Wall Street analysts want them to see grow. So during the quarter, we also built plans that we believe will enable us to generate operating leverage against infrastructure and trust and safety spend starting next quarter and against compensation expense starting in the first quarter of 2024. So all that being said, guys, is they acknowledge that they have to do a better job in cost reduction, but unfortunately not getting it done yet. And the CEO actually reiterated this pretty much earlier when he said, we hope to one day, he said it in different words, but it translated to, we hope to one day be profitable. Definitely not what you want to hear from a company like this. So Roblox, unfortunately suffering. I am not touching Roblox personally. I was enjoying playing it last year, pretty much in 2022, when we were kind of really bottoming off the lows, but I was expecting them to be able to continue to grow subscriber base and continue to cut costs, but have been disappointed personally with the way that they've been executing that. And lastly, we do have Trade Desk. So Trade Desk, very, very good company in my opinion. I like Trade Desk a lot. They make a lot of money. This is a company that's in the advertising business. So knowing that we're in a potential year of a recession, guys, it's normal that companies are spending less and less on advertising. Facebook has come forward and said this. Google has also come forward and said this as well. So it should be no surprise, guys, that Trade Desk is not a company that will be very favorable. However, they did go on a tremendous run here since our last earnings. If you'll see since last earnings, if we take it from the bottom of the cycle here pretty much, right? Bottom to top, we were up over 80%. So despite Trade Desk putting in good earnings today, if we bring it up here, you'll see it's a double beat. Beat on earnings, beat on revenues, by not by a wide margin, right? So it's normal having moved up so much. If they didn't deliver outstanding earnings that no one was expecting, which is the theme of this earnings season, guys, right? I've been saying this time and time again through all these companies that we've reported so far. So unfortunately for them, not able to get it done. They beat earnings, but soft outlook sends digital ad stock down. They didn't give a soft outlook in terms of revising guidance to the downside. Guidance is actually up for the year. It's just, it's not up to an exponential factor that Wall Street wants to see, right? So very, very good. Outlook just above forecast. You'll see it down here, right? So they fail pretty much in today's trading session, right? But they do expect for their yearly earnings and revenue to keep rising. However, unfortunately, as I've been saying, guys, the gist of this entire article is pretty much right here. While results in the quarter were solidly above guidance, based on our conversations, they fell short of buy-side expectations given the stock's recent momentum. Exactly what we've been saying. A lot of momentum, a lot of upside was priced into the stock. So it's absolutely normal, guys, that unless they delivered absolutely outstanding earnings this afternoon, that they were going to take a slight hit. Trade Desk currently trading near the all-time high range, right? Trade Desk, I personally like this stock a lot. If you can see down here, guys, they are increasing revenues every single year by a very, very decent amount. Market cap of 40 billion. So they do have a relatively high price to earnings ratio here, right? This is obviously slightly off. It's like NVIDIA. You have to take price to earnings growth since they're growing a lot and they don't have that much net income to show for it yet. This is a high growth company. Personally, I like Trade Desk anywhere in the lower 60 areas. Anything below 60 is a straight buy for me. Full disclaimer, I do have some of these shares in my long-term portfolio, but buying up here for me is just not worth the risk to reward. So that's pretty much it, guys, for our earnings today. Let's get into some major indexes and give our major tech rundown here. So as you can see, guys, today, these stocks are down once again. If I go through my growth list, guys, you'll see that a lot of things got absolutely destroyed. In terms of our growth stocks, you would be hard pressed to find any green names here, except for solar, which had a pretty much decent little rally up today here. So getting absolutely destroyed on the growth side. Now, daily downtrend, this should be no surprise to anybody. Daily downtrend continues. If we look, guys, we're very quickly approaching our area of support here, right? So just keep an eye on this. We do have an area of support here down on SPY on the weekly, right? This is a decent level, but keep an eye. If we do break this support, keep an eye on your 12 EMA 439 area as your pretty much second stop. If we just blast through this support right here, inflation data tomorrow is going to take this either way. If it's a soft inflation read, meaning that it's better than expected, obviously the markets will be able to potentially rally off of it. But if they come in hotter than expected, guys, expect us to continue this weekly consolidation. Daily downtrend is confirmed at this point, guys. So if we get a bounce, you should still just be looking for a lower high and potential continuation of the downside until the bulls put in an engulfing move and reset the daily uptrend. Daily downtrends, bears are in full control of the dailies, but the bulls control weeklies and monthly. QQQ, still daily downtrend continuation here. QQQ, if you look on the futures, guys, we're actually, remember that support area on SPY? QQQ has actually smashed it to the downside at this point, right? So QQQ trading below our prior horizontal support area at this point, flushing to lower lows today, right? So at this point on the weekly, you're still going to be looking out for your 363 area, 12 EMA to act as some type of support. We've got a decent amount of support levels here coming into the future here. So we're talking about 363, right? Which is your 12 EMA on the weekly, and then 358 down here. But until the bulls can put in a decent enough engulfing move to set the space to create a higher low compared to a previous low, we are not going to be at the end of weekly consolidation. So keep an eye on the daily downtrend. As long as we're in a daily downtrend, guys, you cannot say that this weekly consolidation is over, right? XLF financials holding strong, right? Holding strong, currently in somewhat of a tightening range at the top. I would like to see bulls hold this in a tightening range as best as they can. But if we do break down from this level, guys, as I'll remind you, we're still looking for anything above 32.57 for your weekly higher low. So still even in XLF in weekly consolidation, this is a weekly bull flag. I'm expecting weekly bull flag, find your weekly bottom, and then push up into your resistance 36-37 area. Keep an eye if we do keep dropping. Some very good moving average support down here, and obviously my little area of support in the 33s, but bulls for now holding up fairly decently. Keep an eye on yesterday's low, 34.68. Tomorrow, inflation key. XLV Healthcare. XLV Healthcare also coming down a bit today, got a very nice bounce. So the problem is the bears took back a lot of this upswing move. So potentially what we might get is a tightening range. Would not surprise me, guys, if tomorrow is inflation comes down, or if the markets are just bad for XYZ reason over the next few days, we may get somewhat of a tightening range here. So just keep that in mind on the weekly. Keep in mind as well that anything above 128.90 is just your weekly higher low. If we get into a tightening range, something like this, right? But on a smaller scale, just keep an eye on that. We're still having good moving average support down here, but bulls at this point, this whole area is acting as resistance. And obviously, if the rest of the market is not cooperating, guys, it's going to be tough for healthcare to just be an outperformer and just negate what the rest of the market is doing and continue on its upswing here. So as of now, bulls looking a bit tired on the day here. Not saying that the move is done. Tomorrow, if we get good news on inflation or whatnot, we could jump back up to these highs here. But whenever I see bears take back so much of a move, right, the probabilities favor a tightening range at this point, okay? So I'm looking out for that, but bulls are still in control of the weekly and as well, still in full control of the monthly with the monthly breakout underway as well. So just keep an eye on that for healthcare. IWM Russell still trailing down today, but not flushing yesterday's lows. So at this point, guys, we are still just in a daily downtrend. At this point, if we do get an upswing, I'm expecting resistance to play a big part here, potentially flushing for further lows if the market continues to trend downwards. What are we looking for, guys? Very simply, zoom out to the weekly. Anything above 180.2 is just going to be your weekly higher low for consolidation. Keep an eye on your area here, 189 for your 12 EMA. Decent horizontal support now, which was previous resistance. So daily downtrend, bears are in full control. So until the bulls are able to reverse these daily downtrends, keep an eye on your weekly levels. Weekly charts for me, most important charts right now. Dow Jones. Dow Jones as well. Dow Jones still in consolidation mode at the higher levels, right? So as we cannot push higher highs, we are in weekly consolidation on the Dow Jones as well. 33,700-ish is just going to be an area you're watching. Anything above that is your higher low. Keep an eye. Your horizontal support and your moving average are right down here, roughly at about 34,500. So if value names continue to pull back with the rest of the market, we do have a very, very decent area of support down here that I'll be looking at. But as of now, guys, still in somewhat of a daily bull flag as well, right? So this is a weekly bull flag for pullback, and daily, not quite setting up the daily downtrend yet. Can't flush these lows, right? But if we do flush these lows tomorrow, perhaps, it'll be daily downtrend confirmed, daily downtrend confirmed, just weekly consolidation. Bitcoin not able to follow through. That's why I said, guys, yesterday, I was not convinced, not able to push through this area of resistance. So we're still pretty much in no man's land. Not going to spend too much time on this chart. Bulls need to push above 30,000 here, close above, come back, set the retest area, and then launch. As long as I don't see a pattern like that, we are pretty much trapped in no man's land. It's pretty much a range between your 30 and 28.5 at this point. You definitely don't want to see a flush of the 28.5 lows, but at this point, stuck in a range. So we're just waiting for Bitcoin to do something. Still in search of our weekly higher low. Still have not got it. So Bitcoin doing a whole lot of nothing. One day of push and then back to sideways. Apple also kind of still setting its earnings bottoming process, right? So Apple was doing fairly decent in the morning, right? But just dropped off a cliff. You could see in the pre-market here, we were actually up, dropped off a cliff, and then couldn't get it all back today. So still in its earnings bottoming process. This is most likely going to be a daily downtrend confirmed. Any bounce is just going to be for a lower high compared to our previous high. And then we are potentially going to flush to lower lows into my sweet spot here. You guys know that this is my sweet spot, 175 down to 170, right? So Apple still in weekly consolidation. We're just going to wait for the end of this move and then measure the size of the bounce. The size of the bounce is key. If we get a high bounce like this, you can expect potentially a daily uptrend reversal here. But if we get a very tiny bounce and these moving averages act as resistance and then flush, right? Well, that'll be daily downtrend confirmed at that point, and it'll just be continued weekly consolidation. And at that point, even monthly consolidation on Apple as well after about 6-7 months of upside. Amazon also, AMD holding fairly steady here, going to be continuously looking. This is why I did not write the 109 strike yesterday. You can see, guys, that we almost touched 109 today. We actually did barely touch it. 107, keep an eye on 107, still trapped in this tightening range here. This whole little range here has to break one way or the other. If we break to the downside here, guys, monthly consolidation is still continuing. Keep an eye on my 104 all the way to 100 area. That's my sweet spot for AMD. A bunch of support down here as well. And to the and conversely, right, if we can then crack these highs up here, talking about 119.55, 120, if we can now crack these, right, it'll be daily uptrend confirmed. Your weekly bottoms will be in, and most likely your monthly bottoms as well. So keep an eye on that on AMD. But for now, just range bound. Amazon, bulls pulling back as well, but like I was saying for Google, this looks exactly like Google. Earnings pop, then come down and retest this area right here. Keep an eye, guys, 135. It's going to be your confluence, 12 EMA and horizontal support right there. Amazon bulls not able to get it done, but look, we're still just looking for your daily higher low. Tons and tons and tons of space. Don't forget, Amazon weekly uptrend was just reconfirmed, right? So even if we do keep pulling back, just looking for a weekly lower high, anything above 126. So tons of space, guys, right? Same thing. Weekly and daily is the same area. Just looking for a higher low above this for further continuation. Continuation levels to the upside, guys. 140 to 145 is going to be your next area of resistance. But for now, Amazon still just consolidating. Let's go down to Google. Google still consolidating as well, right? So you remember the Amazon chart, like we literally just went over it. Same thing happened on Google, right? So now Google bulls not able to push. What we're ending up, looks like we're ending up here, potential tightening range going to form at the tops. Worst case scenario, though, is they may set the daily downtrend. If you flush these lows here, 128, you will be setting yourself up for a daily downtrend. Bulls were not potentially able to push higher than our most recent high. So if that happens, you will lose the daily uptrend, sent into a daily downtrend. What are we looking for? Just weekly consolidation at that point, right? Weekly consolidation, tons of space. Anything above 116 would just be for a weekly higher low. So keep an eye, guys. Best case scenario, tightening range here. Well, best case scenario, right, is just smash through the tops right here. But If the bear market continues here, best case scenario is a tightening range. Worst case scenario, daily downtrend into further weekly consolidation. So just keep an eye on that on Google. Resistance areas remain put 140 to 145 as well. Meta, also the bulls now losing our 12 EMA here today, right? So Meta, unfortunately, daily downtrend at this point. The bulls were saving it. They had their little bounce here. We're not able to push higher, lower low, right? So high, low, lower high, lower low, right? So daily downtrend at this point is confirmed. So a lot of our names here, QQQ, SPY, everything is in weekly consolidation. So Meta finally losing it here, starting to come into weekly consolidation as well. Whenever you get a daily downtrend, guys, you know that weekly consolidation is underway. When I say weekly consolidation, it could just be a couple of weeks, right? It doesn't mean that it has to be something like this. It could just be just for a few weeks of weekly consolidation until the respective markets find their own bottom. Key level here, guys, on the weekly that you don't want to lose is going to be your 289 confluence support and your moving average. That is the line in the sand level for me, guys. So keep an eye on that, still with a little gap fill here to be filled at the 300 level. Meta, my sweet spot for Meta is way down here. I apologize, guys. I know it might be low for a bit of you guys, but I just cannot buy Meta at these levels personally, right? Holding shares, fine, but adding more to the position at this level, not worth the ROI in my opinion. So daily downtrend is confirmed on Meta. Just keep an eye, guys. Can the bulls hold firm and potentially reverse this, right, with a move like that? Or are we just going to continue the daily downtrend potentially into our weekly support levels and test here? That would be obviously something, because if we then lose this, guys, it would be monthly consolidation is underway for the next, August and potentially September. Look, guys, it's inevitable at one point, right? You have 1, 2, 3, 4, 5, 6, 7, 8, 9 months of upside without any monthly consolidation. And so if this is the time, guys, Q3 is the time for all these stocks to do this. Q4 is going to be good for everybody. So it wouldn't surprise me if Q3 is just a bunch of stocks that have run a lot into monthly consolidation now. Now, Microsoft, same thing. Daily downtrend continuing today. Lower lows are being set. We're now below my little area here, 323-ish. We've now cracked below this support lightly, so it's on to our next target. Little gap fill here to be had. 314 Microsoft, my sweet spot is closely approaching, right? When we were all the way up here, a lot of people were saying, well, why is your sweet spot so low? Why is it 20% below? Well, because stocks can do that, guys. When we need to pull back, you just need to pull back. When you need to set the monthly higher lows, they will be set eventually, right? And 15-20% pullbacks off the highs are not uncommon for a lot of these stocks, right? So weekly consolidation well underway on Microsoft, losing the support here. So now anything above 275, right? Just hunting for that weekly higher low. Tons of space, guys, but my sweet spot remains 310 all the way down to 285 on Microsoft for a decent little pullback. This weekly consolidation, now that we've lost, right, our weekly support levels here, major support, monthly consolidation is definitely underway. This is, however, a monthly bull flag. Just looking for a monthly higher low for further resumption to the upside. So if this could take, it could be very choppy, but I do forecast here over the month of August, especially if inflation here comes in hot tomorrow, guys, these stocks will continue to sell off slightly until the bulls are able to engulf and reset your daily uptrend. So as long as these are in daily downtrends, guys, that's just the way it is. NVIDIA, same thing. NVIDIA daily downtrend has been just reconfirmed today, right? Continuation on the daily downtrend. Key level here, guys. Daily downtrend. Zoom out to the weekly. 400. Key level for NVIDIA at this point, guys. That's your weekly higher low. So keep in mind, if we lose that level over the next 1 to 2 weeks, potentially, right? Very big level. As of now, we're still looking for a weekly higher low. You do have your 12 EMA here and horizontal support. So we're looking for the weekly higher low for bulls to then potentially have a shot at recapturing or at resuming the weekly uptrend. But if for any reason we lose this, guys, fair warning, right? If we lose this level, monthly consolidation is underway, right? So same thing as Meta. This thing has run so much. Monthly consolidation eventually is just normal to expect. So at this point, guys, just keep an eye out for that. Daily downtrend resumes. Any single push higher is just going to be for a lower high. Anything below 457 is just going to be for a lower high. And continuation of the daily downtrend, need bulls to engulf one of these moves and reset the daily uptrends. A lot of these tech names haven't seen daily downtrends in 3 months, guys. So this should be very notable to you, right? What's happening right now? Tesla, Also, daily downtrend continuing today as well, right? Tesla with lower lows today into the close here, 241.99, quickly approaching. A lot of names are approaching our weekly higher low levels, guys. Tomorrow inflation news is key. It's either going to flush a lot of these names beyond their weekly higher low levels, which means that we'll now be in monthly consolidation on a few of these names, or we're going to save them barely by a hair. At that point, you might be able to expect a tightening range, but for it to V-shape when it's taken back so much of a move, for it to V-shape is very unlikely. Mostly you get tightening range and then breakout, right? So just keep that in mind for Tesla as well. Daily downtrend, very close to our 240 weekly higher low here. If we do keep flushing, it'll just mean monthly consolidation is underway. Anything above 158 is just going to be your monthly higher low. My sweet spot on Tesla here remains 230 all the way down to 210. So just keep that in mind, guys, as long as the bulls cannot reverse one of these moves, right? So look at this move. What we would need is the bulls to engulf this entire move above 265 and then create enough space to reset the daily uptrend. So as long as that doesn't happen, guys, the bears are in full control of the shorter time frames. We will be in daily, weekly, and monthly consolidation on some of these names at this point, right? So very, very, very notable. PayPal, same thing. PayPal still not able to set its earnings bottom, right? So PayPal not immune following the rest of the market down here, right? So still searching for your bottom on PayPal. Look at this. It took a long time last earnings, so I'm expecting it this time to take the same, right? Previous support area stay set at about $60 to $59, right? So expect that to act as somewhat of a support area, but until PayPal, we're just going to be met like Apple. When it starts bouncing, just going to measure the size of the bounce, right? Look at this. Tiny bounce, back to the lows on this candle. The flush happened, then you got your engulfing move. So you need to see an engulfing move exactly like this to reset the daily uptrend. But for now, PayPal, unfortunately, coming down a lot. Palantir down massively after earnings yesterday, right? So today was kind of the follow-up on that. Yesterday on earnings, they kind of ended up flat. You'll see, guys, after hours earnings, they did kind of end up kind of flat here yesterday around 4 o'clock, right? So unfortunately for them, or sorry, on Monday, right? So they did kind of end up fairly flat, but then yesterday, bad day for Palantir, and today, another bad day for Palantir as well, down 10.5%. So now at this point, guys, like I was saying in yesterday's videos, it worries me that the bears have come down this much. The best that can happen is a tightening range. The worst that can happen, daily downtrend, we didn't even get a bounce. We just flushed right away. So now at this point, daily uptrend is lost, guys. Any move up will just be for a lower high here for a daily downtrend continuation. So daily downtrend is highly likely at that point. What are we looking for? On the weekly, looking for weekly consolidation, anything above 1350, right? 1350, 1360, just for your weekly higher low, but coming in hot. Testing the 12 EMA right now. On the monthly as well, guys, may just be due at this point. Look, we've engulfed all of July almost already. Obviously still a lot of time on the month, but just to say, the bears have put in work, so may come down even more, right? My sweet spot on Palantir is always between $13 and $12. So if it comes all the way back down there, I'll be a happy buyer of Palantir. But for now, just kind of watching from the sidelines. So keep that in mind on Palantir. So that's pretty much all of our tech names for the days, guys, today. I hope I didn't sound too bearish in the video, guys. I'm really not. Like you guys know, I'm very bullish this overall market. Like I'm very, very, very bullish. But in this case, guys, for the past 3 weeks, we've been calling this, right? We've been expecting at a certain point, we will need to go into weekly consolidation. We got the daily downtrends. Weekly consolidation is now underway, and we're at risk of losing the weekly higher lows on a lot of stocks, which means monthly consolidation. If tomorrow's inflation report is negative, expect August and September potentially to be that monthly consolidation. Q4 though, October, November, December, in my opinion, guys, is going to be very, very, very good months for the market. So if we have to take 2 months of downside here to get another 3 months of upside thereafter, don't forget, the markets have run a lot this year. So just keep that in mind. We have a very, very, very good 7-8 first months of the year. So it's very normal, guys, that these stocks have to take a little bit of a breather before resetting. I'm very bullish on the market overall. So don't get it twisted. This is a very good buying opportunity, in my opinion, right? Potentially one of the last buying opportunities for the year before we resume our upside. And I think 2024 is going to be beautiful as well. It's just now, guys, just keep an eye on this. if we don't reverse the daily downtrends, right? If we cannot put in daily uptrends, well, your weekly consolidation, potentially monthly consolidation will just resume. So just take it one day at a time. And when the reversal patterns are here, trust me, I will be all over them with you guys. But for now, we will wait for stocks to come to us, which is pretty much the moral of the story, which I've been waiting for and pretty anxious to actually get some of these stocks, guys, at my sweet spot levels. So I hope you guys enjoyed the video. If you did, click that like button and please subscribe to the channel if you're new here. Would love to have you on board with us here. And if you have any questions at all, guys, just leave it down in the comments. I would love to answer. But just once again, guys, please don't take this as me being bearish. I'm really not. It's just I have to report things how they are, right? It's just daily downtrends and weekly downtrends. I wish I could say the opposite, but that's just the technicals right now. So take care, guys. Big day tomorrow, inflation report. I will see you guys tomorrow after the close. Take care and peace.